Oil has added more than 10% since April 12. Thus, the market is ripe for at least a local correction. That's investors expect the quotes to fall, and this can be confirmed by the fact that oil prices have been standing still for the third trading day in a row. This means that their growth potential has been exhausted. However, today's news feed is full of geopolitical concerns, which may well turn things around. The beginning of Russia's full-scale offensive in the Donbas region has grabbed global headlines. From the point of view of major investors, this indicates that both Europe and the whole world are now facing security threats. In addition, there is a likelihood that this event will force the European Union to impose sanctions on Russian gas and oil. This, in turn, will lead to energy shortages. It's this prospect that does not allow oil prices to go down. Much will depend on European Union policymakers and their statements on fresh sanctions. If the new restrictions do not affect oil and gas, the market will have a chance of entering a correction. Otherwise, a resumed rally in oil prices is highly likely. Now let's take a look at the trading chart. Brent crude oil futures slowed down around the level of $115 per barrel, which led to a slight stagnation. According to technical analysis experts, despite a local decrease in the volume of long positions, the market is still in an uptrend. Thus, to extend gains, the quote needs to consolidate above the 115 mark on the 4-hour chart. Until then, there is still a chance that the market stagnation may turn into a pullback. As for gold, the situation is similar. The only difference is that the yellow metal began to advance a little earlier than oil and at a slower pace. Nevertheless, the asset is also about to enter a local correction. The only thing that is holding the quote back is that global geopolitical risks have dramatically increased lately. Likewise, everything now depends on European officials. If the EU significantly tightens its sanctions against Russia, this will further escalate global tensions and increase uncertainty. Against this background, gold prices may well gain value. Gold futures have already come close to the psychological level of $2,000 per 3 ounce, where they faced a technical pullback amid overbought conditions. The metal will most likely resume its bullish run after the price consolidates above the control level on the 4-hour chart. Meanwhile, the Russian currency responded to what had happened with the heavy losses, approaching the mark of 80 rubles per dollar. Besides, the ruble is coming under pressure from the very prospect of even tighter sanctions. By the end of the current trading day, the dollar is likely to rise above the psychological level again. However, it remains to be seen whether the greenback will be able to consolidate above this mark. As already noted, much depends on European Union policymakers and their comments on further sanctions against the Kremlin. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.